Hello. Welcome to this live stream. It's a weekly live stream which I host every Saturday, 10 a.m. Eastern Time. Let me know if you can hear me. I think we had audio issues last week, but I think it was I think it was something to do with my mic. I'm not too sure, but let me know if you can hear me okay. Hi, Olugbenga, good to see you. It's another teaching session. I mean, I really try my best to communicate just learning points I wish I had learned earlier in my trading journey. Hoping that all this learning and all this, so much to learn, hoping it will help you all in your trading journey. Good. You can hear me. Awesome. I'm going to just get started. Hopefully this will be a short and succinct session. It doesn't have to be a long session to get a point across. So I'm just going to get right into it. And it is the topic for today's live stream is how to achieve a high win-loss ratio. It's so important because without a high win-loss ratio, you are not going to be a profitable trader. Very straightforward. Meaning you will win some, you will lose some, but all in all, your winnings need to be greater than your losses, obviously, in order to be profitable. So these are some of the things that 3 points. The very first one is only trade the breakout and the breakdown strategy. I should rephrase this and say only trade breakout or the breakdown strategy. Yes, in the comment box if you know what the breakout or the breakdown strategy is. No, if you don't. Okay, so I'm going to go over it briefly. I mean, yes, you could call it a strategy, but it's so basic that once you understand what it is, you will always be looking out for the breakout. I mean, at the end of the day, a stock can move in the direction you want, and it doesn't mean you'll necessarily make money because in price action, there's always those pullbacks. And so understanding this strategy will help to, I'll move straight to my charts. Understanding the strategy will help to ensure that we're entering into those trades at the point at which it will end up being a profitable trade. Now, Oloyede, blessing, you said no. No, you cannot hear me? Oh, no to the question, the breakout. I get it. Okay, so again, like I said, it's very, very basic. There's so many strategies out there, and I'll just take a moment to go over what this breakout strategy is. I'll just increase, there we go, zoom in right there. Okay, so we're going to focus on this blue price line. Whenever you are trading, this isn't so much applicable to investors necessarily. For instance, I mean, if you're investing in anything over the long term, it may not be so important the point at which you get in. Basically, you know, the price of your stock this year hopefully will be or the price of your stock next year will be more than the price this year, or the price of your coin next year will be more than it is this year. So if you're entering into a trade, and I wouldn't call it a trade, if you're investing in a coin, in a stock, then it's almost immaterial at what point you go in because you're planning to hold it for the long term, right? It's a bit like when you buy a house. You're not so interested whether the value goes up in the next 3 months because you know what? You're planning to hold it for 25 years. And you know that at the end of 25 years, there will be value in your property. Yeah. Okay, so this is really for traders. You're holding a coin, you want to trade with a portion of it. I always recommend, if you do hold any coins, don't trade with all of it. I mean, trade with less than 50% of whatever coin it is you hold. I have a trader on my Telegram group this morning was complaining that he bought Solana at 35, and I bought Sol at $33. But I bought it to invest in it because I like the Solana network, and so I bought it and I just left it. But as of today, the price of Solana has doubled. It's at 78, 70 something. I'm still holding. So the price of my investment has doubled, but that was over, I think it's like a 3-month period. But this trader bought at 35 and he said he sold at 36. And he was lamenting the fact that he sold at 36. But the point is, if you bought at 35, you shouldn't have traded it all in necessarily. But anyway, so that's another topic. So here's the breakout. This is the breakout at this blue line right here. I have it written in here, breakout. Why is it the breakout? It's a breakout because if you look to the left of the breakout sign, you can see that these two candlesticks stopped at this point, resistance. So the blue price line is a resistance to price action at this point. It cannot break through the ceiling. Resistance is the ceiling. So that tells you at this price line, there are sellers. Sellers push the price down. Buyers push price up. So once price is heading up, 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 and it gets to this price line, there are sell orders going in. Sell, sell, sell. And the sell orders outnumber the buy orders. And so we have this dip in price, right? So what we're looking out for is we're looking out for this point where this blue line is. So at this point, we don't have the rest of the chart. So we're at this point. So you're waiting for price action to come back to test the resistance, the previous resistance. Previous resistance is at this blue line. So here we come again. Green, 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 green. It's heading towards that same price level. It gets here. It cannot break through. It gets here. Price goes down. There's selling action down, down, down. And with this candlestick, it's not even this one. Actually, it could be this one because, you know what? This price level comes all the way down here. There, that's much better. Right where it stopped on these two candlesticks. And we come back. These two candlesticks can't break through, but this is the big guy that breaks through. This guy here breaks through resistance. Like that. Can you see that? This candlestick breaks through resistance. Now that's a good sign. That's what you're looking out for. That's the breakout. Only problem is it going to stay above the resistance? So as soon as your candlestick, usually I will trade on the 1 minute candlestick. If I'm day trading, I'm going to enter into my trade on the 1 minute. I'm not going to compromise. I enter in on the 1 minute. If I'm trying to play super safe, I may enter in on the 5 minute. So anywhere between the 1, the 2, the 3, the 4, whatever, the 5 minutes is when you want to enter into your trade. You don't want to enter a trade on a 1 hour. What's that? If you're investing, sure. You're investing for the long haul, over the long haul, sure, but not if you're day trading. This candlestick here, guys, is the operational one. It closes above. The first candlestick, the first green one closes above or breaks out above the blue level. The second and closes. It's got to break out and close. Okay, a close is when a candlestick is completed. Okay, Within the 1 minute, I'm on a 5-minute chart right now. So within this 5 minute, this candlestick turned red. You can see from this wick at the bottom. It opened up right here. It went down. It was red. And within the 5-minute period, it went up, probably came down, red, green, red, green, red, green. But at the end of the time period, it closed. That's when you want to enter into your trade. Or that's when you want to have your finger over the button, like you're waiting for this second candlestick. Now remember, trading on the 1 minute, I'm waiting for my second candlestick to close. Trading on the 2 minute, if you wait for a second candlestick, that means you're waiting 4 minutes. This big guy here closed. It closed. So after the close, look what happened. Dip, 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 dip. So you could call this a not so successful breakout. Yes, two things could have happened here. You could have entered in after it closed. It ran up and came down, but look at where your stop loss is. Your stop loss is always going to be below your entry point. Okay, so even though you entered in on this candlestick here, this second green candlestick, price action came back against you, but it didn't come all the way back down to your stop loss. So knowing where to set your stop loss, again, that's a completely different topic. And look what happened. We have this candlestick, and I'm gonna draw another breakout point. So it breaks out again, resistance. I don't know why it's red. I want it to be blue. So all my blues show either a line of resistance or something. So here again, I'm going to circle the resistance point. No, I'm not going to circle. I'm going to rectangle it. Can you see this resistance? It's resistance again because we have these three candlesticks cannot break above this second blue line. And you know what? Instead of it being blue, I'll make it a different color. Okay, so the second candlestick could not break above the green line. 1 candlestick, 2 candlestick, 3 candlesticks. It couldn't break above. And so we wait again. Here's the guy, this green one. It breaks above and we want to enter into our trade when it closes. We always want to enter into a trade when your breakout closes. And so it closes, right? Now, you enter into your trade and it runs up. Beautiful uptrend. Anywhere on this escalator up, begin to take profit. Now, when I say anywhere, I use it very loosely because generally speaking, you're taking profit at your different support and resistance levels. So that's like key. But again, that's for a different topic. So basically, we're taking profit. But I'm going to move forward in time. We are going to assume that you enter into the scene when price action is already, I don't know, it's up 5%, it's up 3%, it's already running up, and you're thinking, oh my goodness, it's running up, how did I miss it? This is the point at which you want to be very, very cautious. You want to be patient enough for this baby here to get as high as it needs to get and to retrace. You want to pull back. You see, because what if you enter at this point? What if you enter at this point? You know, green is looking up, you know, you feel you've missed out on the action. You know, there's a little FOMO coming in here. FOMO meaning standing for fear of missing out. You're like, oh my goodness, I'm missing the uptrend. But you can't enter in at any point other than the breakout point for a profitable trade, guys. I mean, you can enter in at any point you like, but the question is, you're wanting to increase your win-loss ratio, so you want to enter in at the breakout point. When you miss it, it's not the end of the world. You're going to be patient, and you're going to wait for this price action to come back. It's going to come back. Now I'm going to move on. Let me move on. Yeah. Okay, so you're waiting. We're waiting. It goes. This is another possible entry point, but that's not what that's not the topic of today's live stream. Remember, we're talking about how to increase, how to improve your win-loss ratios. To improve your win-loss ratios, you only want to be entering in at support and resistance or key price levels. You can identify key price levels by learning how to draw these price levels, these, what will I call them? Yeah, to draw support and resistance lines. Okay. I do have maybe 3 or 4 videos on the topic support and resistance, only because I didn't have a clue about what support and resistance was when I started trading. And of course, it stands to reason that I lost more than I won in my first at least 2 years of trading. I was making money, I would have some good trades, and I was losing money because I didn't understand support and resistance. So I've made about 3 or 4 videos. Check them out on my channel. So you've missed out on breakout number 1. So we're going to wait. We're always going to wait. I have been trading for quite a few years, and I still find it difficult to wait. I still find it difficult to wait. You want to wait until it comes back to blue line. It's coming back. Price action will pull back to the blue line. Okay, I'm going to answer your questions after this. Solomon, I will answer your questions. So, and you can see what happened. It took some time, but price action, didn't it come back? Okay, so that means it's come back to retest the previous really strong level. That previous level before was resistance. Now it is support because it's supporting the price. It's like, so support is your floor, resistance is your ceiling. And that's why I've drawn these 2 blue lines. We have the support and we have a resistance. We have the floor and we have the ceiling. And so we're waiting to buy or sell at the floor or the ceiling to increase our wins and losses. It doesn't mean if you buy or sell at other points within these 2 blue lines, it doesn't mean you won't make money. It just means you will not, you reduce your chances of coming away with a profitable trade. That's all it is. It doesn't mean you can't win. You can just get lucky. Price action is, kind of strong. Momentum is strong. And all that good stuff. And yes, you can make money, but you'll be making money not because of your strategy, but because the market was favorable. So we come back here and look what happens. Red dumping all the way down to our stop loss point. And we want to enter, right? Because we've been patiently waiting for price action to come down. We have this first green candle, which is awesome. It closes green. And most importantly, it closes above resistance. Good. It's the second green candle we're looking for. We're waiting for confirmation. The market is almost merciless when it comes to, volatility. It's up, it's down, it's down, it's up, and you're trying to figure this thing out. Wouldn't it be awesome if price action just moved up and then move down and didn't just do this oscillation up, down, up, down, up, down? But that's the nature of the market. We've got to trade with the market. And we close on this second green candle. Good, really nice. That second one. We have a little retracement and we're going to buy at the next breakout point. I'm going to move the green line. Hang on. And this is there, breakout point number 2. Okay, so we're going to enter into our trade. Now, once you enter into 2 points, you can enter in at the first green candle here. You can wait, you can enter in at this second, but the point is not to get excited. Of course, when I say not to get excited, I mean don't get excited and hit the sell button just because you see 1 or 2 red candles. Your job as a trader is to be calm enough to determine, is it a mere pullback Or is it a reversal? Well, it's never going to be a reversal at this point, because reversal means we're coming all the way back to the beginning point and breaking down. Okay, so with the breakdown, of course, if you're a short seller, you'll be interested in the breakdowns. I do not recommend for newbies to really worry too much about selling short or going short in their trades. It's important to focus on bullish trades. Now, what I want to point out is once you've entered this trade, the blue level and the other blue level, this is your area of action. Between the blue levels, you want to take profit. Why between the two blue levels? Well, you see this second blue level twice. At this point and at this point, 2 times, price has had difficulty getting above it. So if resistance is resisting price, that shows you that there is a slim chance that price action will break up. Here, it proved it. It did not break up because of the previous resistance. See? What is the chance? What is the odd of it breaking above the third time? To play safe, you will say it did not manage to break above first time. It did not manage to break above second time. It probably will not break above third time. So I'm going to take profit. You're going to take profit before it gets to blue price level number 2. You're going to take your profit. You can take it at any point here. Once you see one red candle, you may decide to take profit at that point, and you've gone from blue, first blue, up to this point. You got some profit there. You could decide to go back in. This is how I trade, guys. I'll go back in again at that second green point. Can you see that breakout? Breakout from this point. Jump back in the trade again. Why am I going back in? Because I still have some profit margin. Remember, I'm taking profit between the two blue zones, between the two blue lines. I can still go back into my trade at this point. Now, bear in mind, I've already made a profitable trade from the retest point at the blue all the way up to the second green. I've already made some profit. If I decide to go back in, I will wait. I will not go back in down here. So I'll draw another triangle. These triangles I find very, very useful. If I'm going to go back into this trade, at this point, once price action breaks out at the top of that rectangle, I'm jumping back into that trade. You can see it keeps on happening. You go up, it comes back to retest the entry point. But what happens, it maintains this second green level. See, guys, it's not breaking down. So many times I'll be in a trade in my earlier days, and I would have jumped out of this trade a long time ago. Sometimes it just depends on where your stop loss is. But in this case, you see another retest. You see this other retest right here? Let me draw the other retest. Here is another retest right here. What is it retesting? It's retesting the rectangular resistance, the resistance created at this second green point. And what happens? Price again moves up. Now, as price is moving up, you're gonna take profit at candle number 2, 3, 4. You can take profit when you see a red candlestick. There's nothing wrong with that. You could wait out this red candlestick. So that's 5 minutes on this chart. You can wait it out. Next candlestick, anywhere you take profit. But I have this rectangle up here that shows my take profit zone. Let's get my chart working in my favor. I don't know why it keeps on doing that. Actually, I do know why it keeps on doing that. Okay. Okay, so I call this a take profit zone because, again, price action is approaching. Look, it didn't break out the first time. It didn't break out this level the second time. Why would it break out at this point? Exactly. Don't wait too long. Don't wait till price retraces on you. Begin to take profit. Professionals actually take profit in an upward trend, and it's easier for newbies to begin to enter into your trades when you see the upward trend. It doesn't mean you won't make money, because you do have those jackpot type of situations where the coin or the stock is just moving upwards ever, backwards never, for hours. It's unusual. What is more usual is that it will move up, it will come down. It will move up, it'll come down. That's more usual. So we're going to work with the usual, and we're always going to take profit. When we see green, we take profit. When we see red, we prepare to buy. And that took me a long time to switch my mindset around, because when I see red, I sell. When I see green, I buy. But to increase your win-loss ratios, when you see red, you need to get excited, because price is getting cheaper and cheaper and cheaper and cheaper. You get excited. It's like there's a sale going. Now you're only waiting for when there's going to be a breakout like back here, so you can jump in at a cheap price. That's where you make your profit, because you bought cheap. And because you buy at the retest point, you have a chance of buying, you have a chance of price action moving all the way back up to the blue level, all the way back up. This big white arrow shows how much price movement you can profit off. You can profit off this range, rather than buying halfway through and then your trade going against you. Now, that is the very first point. Very, 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 very first point. And I have other points. It says only buy on the close of the candlestick. Now, I have mentioned that whilst I was explaining the breakout and the breakdown. You're always waiting not to see green. You're waiting for that green candlestick to close. It has to close. It has to close and present green. A green candlestick can turn into a red in half a second. So that's why we wait for it to turn green. And my very last point is always set your stop loss, period. Always set your stop loss, period. Always set your stop loss, period. That's just the only way to increase your win-loss ratios. Now, this is something I need to pay more attention to, because sometimes I might take 4 trades or so in a day, and the first 2 are profitable. And then the third one, I might get a bit lazy, or I might get a bit overly confident and decide, I don't need to set a stop loss. That third trade can wipe out your losses from the first 2. And so it's something I have to constantly remind myself not to forget to set my stop losses. We're all working, guys, to become profitable traders. When you become profitable, the next goal is to become more profitable. The minute you can attain onto $10 a day, the next step is to try to make $20 a day, right? You don't want to stay at $10 a day forever. The minute you can attain that $20 a day, 3 out of 5 days in the week or something like that, then you want to try to see if you can attain on to $25 or $30 or $50, on and on and on, until you get comfortable with the $100 and the $1,000 a day type of trades. Okay, and that's all I have for today. Very important point. And I can take some questions. Okay, so Solomon, you say, I wish to understand these candlesticks, but it seems complicated to me. The terms resistance, key price level, etc., all complicated. Yes, it's complicated because you haven't learned what they mean. Take time to study candlesticks, watch videos on candlestick patterns. I do have a candlestick pattern playlist. Solomon, I have a playlist on my channel. Go to my channel, click on playlists, and search for candlesticks, and whatever comes up, just watch it. I tried to put I think it has, I don't know, 3 to 5 videos in that playlist. Settle down. It's like you're back in school again. I'm not going to spend this live stream explaining candlesticks. Neither am I. Key price level. A key price level I can explain. Your resistance and support levels. Solomon, I did explain resistance. Resistance is like the ceiling. That means that's the highest price that price action. No. A resistance simply is a price level at which price is operating below the resistance. Like you have your ceiling. When we're in a room, we're standing below the resistance. And so we're going to call that ceiling a resistance. And that's a price level. And you can have situations where price is trading constantly under a price level. Let me find one. Okay, so look at the blue level at the top, right? All this price action here is operating underneath the blue level, underneath the resistance level. This whole, let's do this. All this is operating under the blue price level. So that blue price level, we're going to call it resistance. And it's important. It's important for a trader because look, every time price gets there, price runs away. Price is rejected. That's why it's resisting. You need to know these resistance levels and you need to know how to draw them. There are various ways of drawing your resistance levels. We've gone over the Fibonacci levels. That's one automated way of drawing your levels. And just what I have done here. Okay, just what these green levels, these are support and resistance levels I just drew. It's a skill. You have to learn how to draw them. So again, two price lists. So 2 playlists I would suggest you watch is the playlist on support and resistance and the playlist on candlestick patterns. And by the time you go through those videos, Solomon, I guarantee you will have better understanding. You can't trade profitably. You can't just jump in a trade without understanding the key milestones. Just like when we travel, right? It's important I just came back from a trip. It was 5.5 hours away. And, those road signs are pretty important, especially when the road forks into 2 or 3. You're looking at the road signs. Sometimes your navigation system's a little slow, or maybe, reception is poor. And those road signs will tell you, no, keep left or keep right. Same with your price levels. If you don't have that when you're trading, you're just going to end up having more losses than wins. And that's what this live stream's been all about, guys. I hope it's proven useful. If you have any questions, now is the time to ask your questions. Now is the time to ask your questions. If you haven't hit that like button yet, now is the time to hit the like button. That's your way of paying me for my time. I'm actually a teacher by profession. Originally an engineer, but I ended up as a teacher. And so when I teach, I usually get paid. But on YouTube, I get paid through your likes, right? So don't forget to hit those like buttons. I appreciate it already. Don't forget to share the live stream with your colleagues, your friends who you know are struggling in their trading journey. Subscribe to this channel if you haven't already. Thank you for those likes already. I appreciate them. And if there are no more questions, I will end this live stream for today. And I will see you guys again, same time, same place, next week. Happy trading.